Market watcher David Gordon. David, reading the markets, they're optimistic that he will see through all of this and will see the wisdom of big tax cuts in the middle of all of this. Do you?
I'm sorry, can you repeat that? I didn't hear you.
Do you see tax cuts still on the table, and big ones at that?
Oh, absolutely. Well, I see tremendous tax cuts. I think that they're going to bring the corporate tax rate down to 20%. And, you know, the one thing that's going to maybe hold it up is the BAT, the Border Adjustment Tax. I think folks in Congress are going to have some problems with that, and I think they're going to have to work the...
What if that doesn't happen, David? I mean, I'm getting increasing signs that it's not going to happen.
If that doesn't happen, I think we're due for a pullback because the market's pricing in big tax cuts, the market's pricing in deregulation, and the market's pricing in some infrastructure investing. So if that doesn't happen, we can see a pullback.
All right. What if you get the big tax cuts, but without technically paying for them? In other words, this border tax, whatever you want to call it, thing doesn't go through, doesn't have the votes, and the Republicans just can't muster enough in spending cuts. If you're in that camp that says you have to pay for tax cuts, many are not, they're not going to be able to. But they still have the big tax cuts. First of all, how do you feel about that? And how do you think the markets, regardless of your feelings, will respond to that? They get their big tax cuts. They're not exactly paid for up front.
Well, you know, the downside to not paying for them is that it'll be like the Bush tax cuts, and you're only going to have 10 years. I think it'll be artificial stimulation, as we've seen before. I mean, the market initially will rally. You know, it's a very short-sighted, and it looks for today and not for necessarily down the future. But yeah, in the long run, if we can have balanced tax cuts, then that's a problem.
You know, there's the other theory that what they do, David, is they scale it back. If they don't get this import tax thing, then maybe they're not as aggressive on the tax cuts. And maybe for the upper income, it isn't a cut to 33%. It's 35%. The corporate tax rate isn't lowered to 20%, more like 25%. Then what?
I'm not as concerned on personal tax cuts. I think as far as the market's concerned, as long as you get some kind of pullback in the corporate tax rate, I think we're in pretty good shape.